Okay, welcome back to the ICT course. This video is going to be on liquidity, everything that I feel you need to know to get up to speed with the concepts. But again, giving credit to ICT for all of these concepts that he has taught. So if you do want a deeper understanding of his content, then check out his channel. So the theory of liquidity is that there are a large amount of orders resting at point or area, and price will be drawn to these areas, either to stop traders out or to enter large position sizes as liquidity is needed for this for the big institutions, or for both of these reasons. And there's buy side liquidity and sell side liquidity, which I'll distinguish in the next slide. But once one side is swept, it's likely that the other will be hit next. And that's something you can use when placing trades looking for targets. So you can see here the difference between buy side and sell side liquidity, with equal highs and trendline liquidity, as well as equal lows. So there's buy orders resting above the buy side liquidity and sell orders resting below the sell side liquidity. Okay, sorry to interrupt, but I'll try and make it quick and useful. I've started a premium Discord group if you do want to accelerate your trading journey, and I've got a few different options that, depending on where you are in that journey, you can take. So firstly, I've got a monthly mentorship where I do weekly calls, give you my trading setups, as well as support from me and a strong community of determined traders for just $5 a month. I've also got a complete SMC course with everything that you need to know in one place, as well as the strategies that I trade on funded accounts with proven results. And it also comes with a free 30-minute meeting to accelerate your trading journey and fix any issues you have. And then finally, if you want a more personal approach, then I have a few spots for one-to-one mentorship with monthly or more regular calls and unlimited, pretty much 24/7 access to me. Any questions you have, just send them my way, as well as a tailored learning path that I will create for you to get you profitable. So thank you for listening to that. Definitely check out if you're interested in any of those options, and let's get back to the video. So how do you use it? Well, you can use liquidity for your strategy, either by waiting for a liquidity sweep and then a change of character, or just some displacement if you want to enter aggressive. But you can also look for liquidity above or below your area of interest, as it is likely that the big institutions will sweep this liquidity into your zone, giving it higher probability of playing out. And also liquidity is a good thing to target as price is drawn to it, so keep that in mind when you're placing your take profits. So then what you're going to look for? Well, the main types of liquidity that you should look for, in my opinion, are equal highs and lows, previous day highs and lows, previous session highs and lows, and then key swing highs and lows. And you can then add your own discretion as you gain experience, as you start to spot places in the chart where you think there's liquidity resting. You can watch those areas as well as these 4 simple things to check out. So just a quick example, here you can see there's equal highs, 2 clear key points with pretty much exactly the same price. And you can see later that it is then swept by a wick above the highs before pushed down. And so on a lower time frame, you could definitely get an entry there. I think I definitely saw one. So this is one way to use it. Look for liquidity, look for it to be swept, and then on a lower time frame you can enter maybe on change of character, displacement, whatever you want. So then liquidity pools are also something that ICT teaches about, and he names the liquidity resting above or below recent highs and lows as liquidity pools, specifically when there is an area that seems like retail support or resistance, like if there's multiple highs or lows near each other. There's going to be lots of sell-side liquidity or buy-side liquidity, lots of retail traders and also institutions placing their stop losses in those areas, and it will get targeted by other institutions. Then a liquidity void is when there are 2 or more expansion bars, and you can see a big fair value gap and clear momentum and volume in one direction. And price often revisits the void and then reacts from it, so you can catch entries in the area. But it would look something like this. Here you can see huge buying pressure, liquidity void left. Thank you for watching this video. Hopefully you learned something again. Trying to keep them short so you can just get a feel for all the ICT basics. But the next video is going to be on premium discount arrays, so definitely check that out as well. Very important. Thank you for watching, and I'll see you in the next one.